Welcome back to my channel. Today I want to give you a quick review of what is happening on the Volatility 75 market. For the past couple of days, the market has been very choppy, and that's the term the retail mind says, but actually we had some sort of accumulation in there. And so let's go down. Let me begin from this point. When the market actually broke the structure, when we originally had a break in market structure, it was from this point, right? Okay, let me not use this for now. Let me just use straight lines. Okay, there was this was the point that we had a break in the structure, and then price traded up to this point. Okay, price broke structure here and rallied back all the way to this point, and then reversed into this area where we expected price to retrace back up, and it did. Okay, so now take note of this particular price point. So when we are looking at a swing into the bullish market, we consider this particular swing as a point of reference. Okay, a point of reference. So whenever price trades, as it forms the new swing for the bullish trend, this is the first swing that we have. Okay, so now it goes down, then it goes up higher, it trades into this particular area, and then it reverses back up. Okay, so now what is the premise? What am I trying to insinuate here? Okay, what I'm trying to insinuate is that now this high, whatever price point that will swing, or whatever low, okay, that would take price break this level. So for instance, this particular level, if price trades and break this low, if price trades and break this low, it means that the market structure has shifted again. Okay, this is what it means. All right, so now what I'm trying to say is that, so when we go down to our 4-hour time frame, whatever swing that would take price break this high, okay, becomes a very long-term low, which price must not violate. If price violates, it means that we are definitely heading for a shift in the structure. Okay, so now you look for that particular price point, so that when price trades to that level, necessarily we don't expect price to break into or break below that level. Okay, so this is one of the premise to know. Okay, so we have a shift in structure. Market has shifted upwards. So where must it reverse? As it's forming highs and lows, where must it reverse into, so that we know that at this point price would automatically. So today I'm going to give you an eye opener of one of the gist. Okay, so that you know especially where some of the lows will be formed, the short-term lows will be formed and all that. Okay, now let's go to the hourly time frame, 4-hour time frame. Okay, so we are back to 4-hour time frame. Then let me take off this item from the chart. So we are back to our 4-hour time frame. Okay, so on the 4-hour time frame, this was the level that I was talking about. This was the level that I was talking about. On the 4-hour time frame, this level was the high that actually broke into the market. So now let me put a line here for you to see. This was the high. Okay, this was the high that actually broke the structure, traded high all this way, and the market reversed into it. And so now whichever low that rallies to break this high, okay, is considered as a long-term low, which price must not necessarily break. Okay, so for instance, if price trades back into that level, it must not break it. So which price point actually broke this high? Which swing actually went to break this high here? Now it's still clear, which is this particular low. Okay, this is too clear. It's more than clear. Okay, This is the level. This is that price level that actually broke it. Okay, this is that price level that actually broke. This is that price level that actually broke, or the swing from which price went rallied and broke this um high, this high that was used to shape the structure. So at this point, this low becomes a short term or a long term low. Okay, so this low becomes a long term low. So it's a long term low, LTW. Okay, this is a long term low. Now, if we have this as a long term low, it means that price can trade and retrace back to this level but shouldn't break it. Now we had an area of consolidation where price actually consolidated around this area, and I think I had explained earlier in some my videos earlier that price consolidated, and then what did it do? Manipulated, came down, redistributed, and then so price consolidate or price accumulated more orders, manipulated, and then it traded down as it was supposed to. Okay, so this is what happened when we were around this area. And when we have price doing this, can you clearly see that there are liquidities resting below this area? Price, the retail person thinks that price would get to this level and gets bounced off again, so they begin to place their buy orders. Now price, and then they put their stop loss below this area. Price goes up and trades and come down and take down all their stop loss, take them out of trade. And then the retail man comes in again and says that, okay, price has broken the level, so what we'll do is that we'll have to, price has broken this level, so what we do is that we have to sell. Now they begin to sell, then price rallies back up and it trades against them. So all these areas were areas of liquidity. Okay, all these areas were areas of great liquidity. So we had liquidity pool here. Okay, we had this liquidity pool here. Okay, liquidity pool. So let me quickly put it as LP. Okay, we had this liquidity pool in this area. Where else did we have liquidity pool that price? So all these areas were just short-term lows, So you notice there was this fair value gap within this area. Okay, beyond this place being sell side liquidity, which was taken, there is another area here which also formed another low. So far as we are not closer to our long-term low, we are good to go. Now we had this area, price actually came in. What did it do? Price came in to raid it again. So we had another liquidity pool here. Okay, and what was the next liquidity pool? Price traded and it came down to this level, and from all angles we can clearly see that price actually traded into this liquidity pool again to get us informed that there was more liquidity pools in the market. Okay, there were more liquidity pools in the market. So now clearly what you should even see is that the market was actually taking down all the liquidities. Market was taking down all the liquidities. So we had liquidity 1, liquidity 2, liquidity 3. Okay, so market took down all these lows. And as market took down all these lows, what were we necessarily supposed to expect? Let's look at the next thing. Now, so as I said, market is not supposed to break this low. So market trade down to this level. Necessarily, what I would even expect was that I would try and place the trades, which I entered. I entered the trade here at this level. Okay, I entered the trade at this level. Expected it to. Now, what is my premise of entering a trade here? Okay, so here I'll quickly have to go down to my 1 hour time frame so that I get a more clearer picture of what actually transpired. This was a whole week. Okay, one of the premise too is this, that market actually takes, so in as much as there was this low which was formed in the previous week, which was not lower than this, when price traded and got to this level, anytime I see price trading around an old term low, which is a weekly low, which was also below, which is a little bit above the long-term low, what I expected was that price would definitely take this area down. Now, to give you even a more clearer picture that price was going to take this area down, let's go down to 1 hour time frame. On the 1 hour time frame, what did I see? And what can you also see? I saw an area of consolidation or accumulation. So I saw price accumulating at this level. Price was actually accumulating more orders at this level. And what did it do? As price accumulated more orders at this level, look at what happened. Let's put it this way so that you see how it works. What happened? Price actually manipulated. It traded down, but never broke down the long-term low. And then what did it do? It begins to redistribute. So clearly we have the AMD pattern at work here. Accumulation, distribution, accumulation, manipulation, and distribution. It's so clear. So we have accumulation, we have manipulation, we have distribution. Okay, so basically this was what was actually happening here. We had market accumulated more orders within this area, which sometimes is a bit difficult to get trades, but I managed to get a few trades, although I had small profit here. Okay, and then the next thing was it now has to manipulate. The manipulation means that it's going to trade the opposite direction, which will make you feel that, oh, down the retail mindset says that when you have an area of consolidation, you look at where the breakout points. Now they feel that, oh, market has broken out of this level and they begin to sell. No, this is what we call the manipulation level. And then price begins to trade into the original direction of trade. Okay, so when price begins to trade into the original direction of trade, what do we expect? We expect necessarily price to break these highs. These highs here, these highs here. Okay, and then what must we expect next? For price to retrace back into an area of liquidity, and then we take price and run up higher. So if this is not, please, this is not an investment advice. This is not an investment advice. Okay, all right. So now let me give you my premise. So for instance, if I have this market like this now, so where would necessarily be my area of trade? So I go down to a smaller time frame to check out, okay, which area can I enter my trade and all that. I can see some first of all, I can see a gap here, a gap in this side, inside this area, and I can see another big fair value gap here. All right, let me go down to 15 minutes time frame. I can still see that gap having even a little bit lower gap below this area. Okay, which I would necessarily expect price to retrace into. All right, if I have to pick on the lows, this is one of the areas. Go down to 5 minute time frame, you could see that, yeah, this is one continuous bullish yes, this is a continuous bullish order block, which is this bearish candles trading this way. I was one continuous where I'm expecting, if price gets here, well, I can be a buyer at this level. Okay, even coming down to the 1 hour time frame, you can see that there is this small area of price imbalance. Okay, which, let's say if I refine it, it will be in this level. All right, and if you consider this as an order block, I consider price coming a little bit into the wick. Okay, so basically this is all that I can foresee on the chart. Okay, foresee price doing So this is an imbalance. So price imbalance. Price imbalance. Okay. So basically, this is all there is that I see on the chart. And guys, I want to. So another important thing that gives you a premise. Whenever you're having whenever you see price action, you should have more premise to give you the go ahead to have your entries. Now there are these highs that has actually formed trend line phantom. Okay, we don't trade trend lines, but we have a phantom called Trendline Phantoms. Okay, which is taught by my mentor Michael. So we have this high, we have this high here too, and then we have this high. Okay, all these areas are areas of liquidity that price would necessarily take down. So we expect price to go rally up above all these trend lines. Okay, so these are trend line phantoms. All right, yeah, trend line. So the trend line phantom, sorry, trend line P. Okay, so this is it. This is it with the trend line phantom. So guys, that is all that I see on the chart. And then so I wish you a good trading. And then I hope we have price span turns out the way I'm expecting. So if I was a normal trader, where would I place my orders? So for instance, like knowing that there's this small imbalance area here, depending on my volume, which my stop loss should be below this old low, I can have to, what I have to do is that I have to place a buy limit within this area. Usually I place it not too close to the body of the other block, just somewhere in between. Okay, then my stop loss is below this area. And then what my expectation is, if price retraces back here, picks my orders, will look at going riding up higher. Okay, and guys, most of you, when you place trades, I think you should be patient. Okay, Sabel, you should be very patient with your trade. Take your time. Trade would come back to you. Okay, so basically that's it that I have for you this morning. I wish you a good trading. Please subscribe to my channel if you haven't subscribed, um and then share the video for others to also like. And the more you subscribe, the more you give me thumbs up, it encourages me to record more of the videos. Okay, all right, so I wish you all the best and enjoy your trading. Have a lovely day.